In less than 24 hours, Bitcoin will be closing another monthly candle. The question is it going to close above 30,000 or are we going to see a monthly rejection from that $30,000 mark? In today's video, we're going to be discussing the relevance and importance of 30,000, the short term and the macro price action. Let's go ahead guys and get into the video. Okay guys, welcome back to the channel. Thank you so much for tuning in. I hope you're all having a spectacular day. We're here to talk about Bitcoin today guys on the higher time frames, on the macro, on the small time frame, market data, economic news, and of course, the monthly candle close as we have less than 24 hours. Before we get into anything, go ahead and smash the like button, hit the comment button, and subscribe to the channel. We do daily videos on Bitcoin focusing on the price action, the data, the technicals, the structure, no BS, no hype, no emotion, pure raw TA and probabilities guys. If you're interested in more content like that throughout the day between our videos, join us on Telegram. The second link down below, you've got access to charts, updates, analysis, information, videos, educational posts, news events, and so much more to keep you going with content throughout the days. Of course, this will start back up on the May 1st. We'll take a little break over the weekend, but we're starting our posting here again tomorrow. If you're interested in trading signals and to join our VIP channel with over 561 members to get exact access to exact entries, exact targets, exact stop losses. Here's an example, entries, targets, stop losses. You can do so by contacting us over a free channel. You can see our results for April over here, 28 wins. 28 trades, 22 wins, 6 losses, and of course our entire trading track record right over here. If you're interested in more information about that, click the pinned comments, go up to the top, then you can find all the information right over here. You'll get access to 2 main channels, etc, etc. Go ahead and read it guys, highly recommend it. Let's go ahead and get into a video starting off with the market data. Currently, it is a weekend, so volume is down, volatility is down, no surprise. As a result of that, we have seen 24-hour volume drop 40%, and we have seen 24-hour liquidations drop 47%. Not anything of surprise. Currently, Bitcoin is up 2.48% for the month, sitting just in the green for April with less than 24 hours closing. It is likely Bitcoin will close out green. Now, here is the thing. Bitcoin is sitting at the current price at 29,125 as per the chart over here. We'll show you in a second. We have about $800, $850 to catch up today in 21 hours for it to close over 30,000. We're going to discuss the short-term trend today, discuss the macro, and talk about the probabilities of that. But more importantly, what does it mean to close over/under 30,000? So looking at the market data there, guys, it doesn't say too much. What it is telling us is that it's weekend price action, it's consolidation. We are going to see a bit of a drop in volatility, and we are expecting a price surge moving into a new week. Of course, with CPI data, FOMC, that is going to drag a lot of volatility in the market, and we'll talk about how this can impact the price. Volatility index 30-day period dropping to 2.02, but a 60-day period it is dropping, or it's actually risen a little bit to 2.93. So we're seeing a little bit of discrepancy between 30 and 60-day period there on the volatility index. And of course, like we said with liquidations, it has dried up just a little bit over the last 2 days because of course we are seeing a little bit more consolidation. We have seen a lot of longs liquidated, a little bit of shorts liquidated here and there, but mostly taking the cake on those long liquidations. Looking at the DXY guys, we are at support. Of course, the market is close to DXY currently. It's going to be very interesting to see what happens over here. We did form a double bottom formation. We had a bullish engulfing candle that had pushed the price upwards. We are still holding above our major horizontal support level. Again, this major horizontal support level is acting as a trigger for the markets, guys. Really important you understand the correlation between the US dollar and asset prices. In fact, it is inversely correlated. So generally about 70% of the time, if the US dollar drops, we see the stock market rises, and the stock market and cryptocurrency are correlated positively, and we generally see those move in the same direction, but they move by different percentages as they of course have different volatility indexes and different variances. So it's very important to understand that. Looking at the DXY here, if the DXY does lose this lower support level, as you can see marked by this double bottom, we are going to see a drop. That drop is going to be quite aggressive, because it's going to lose over a 1 year long support, but in turn, we are going to see the markets rally. We're going to see the S&P 500 break its local yearly long resistance. We're going to see the Dow Jones break its local yearly long resistance, and that could result in a small rally for both Dow Jones and S&P 500. We could see the S&P 500 reach as high as 4,300. We could see the Dow Jones push upwards to reach some of these untapped highs at around 35,000. Again, guys, if the Dow Jones does want to go up, if the S&P does want to go up, we have to see the DXY drop down. If the DXY does break upwards any further and starts to reclaim and break through his longer diagonal resistances, we are going to see the dollar actually flip, and we are going to see these markets correct. And the correction levels are, of course, these uptrending support lines represented by the dotted and horizontal line. If that does occur, we can expect Bitcoin to, of course, also rally, or should I say, correct. Now, here's the thing. A lot of what occurs with the DXY and, of course, the stock market, and now going to be crypto, on the macro scale is determined by three major factors. And the main one out of those three factors being economic, social, and political, the main one being economic, okay? Economic data completely directs and drives macro price action. When we're looking at macro price action, macro reversals, macro trends, it is completely determined by economic data. And economic data in cryptocurrency, in the stock market, as opposed to the economy, how it is perceived is different. The markets in general perceived data completely different to how the economy perceived data. What may be bearish for the economy can be bullish for the markets, because they are not the same. The market moves on perceived systematic risk. So a bad piece of news comes out for the economy, but it is deemed to be recovering, meaning, of course, interest rates going up is still bad, but the rate of if the increments of which the interest rates are going up decrease, okay, even though they're still going up, that is actually perceived to be decreasing perceived systematic risk, and therefore actually perceived to be bullish for the markets, as it predicts, or what it tells us is in the future that we are going towards a pivot. And that is all it takes for the markets to rally, and that is what we've been saying for a very long time. We've said that all the way down over here, guys. We've said perceived systematic risk is neutralizing, it is shifting upwards, the bears are losing strength, although the position in the economy, although the economy doesn't look too good right now, the markets are going to start rallying on perceived systematic risk as that is falling. So if we're looking at FOMC coming out, if we're looking at CPI coming out, both of these events, more importantly FOMC, are going to have massive impacts on the macro price action. If Bitcoin fails to close a monthly candle above 30,000, but FOMC comes out exceptionally bullish, we are going to see the market still rally, because perceived systematic risk is falling. Their cash rates are falling. The cost of debt is falling. Companies are more likely to acquire risk assets, invest in crypto, invest in stocks when debt is cheap. This pushes the price up. Along with that, if interest rates come down, the available household expenditure increases, debt service ratios decrease, people have more cash to invest, and the prices increase. The macro direction is heavily tied to what interest rates are doing, particularly when it comes to risk assets. Very important stuff, guys. We'll talk about it more later, but there's a brief overview. So let's go ahead, guys, and get into Bitcoin now. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you could do so with the link in the description. Thanks for listening. How are we looking? So, on the macro scale, guys, let's start off. We obviously have only about 21 hours left until the monthly candle close. And as you can see, the monthly candle close is a significant level. Not so much a monthly candle significant, but in the terms of where we are positioned on the horizontal scale, price action wise, is completely, I would say, completely important and completely relevant that we take a look at this, because it is absolutely significant. The $30,000 level, according to prior cycles, in this instance represents the yearly low of the prior bull run. We can see the yearly low represented by a red line, the yearly low of the prior bull run represented by a red line, and the yearly low of the prior bull run represented by the red line. Okay, you can see these are bull run support, so they do extend into the bear markets, which they provide support during the middle half of the bear markets before we lose that level, and then we crash below that level and we see a significant sell-off, which eventually marks actually the bottom of the bear market. Okay, so provide support nearing the end of the bull market and during the middle half of the bear markets, because it is the yearly low support of the bull run highs. So as we can see, every single time we close a monthly candle above that red horizontal line, that actually is what the trigger is to flip the macro trend upwards. Currently, we are in a weekly and daily uptrend. We are in a daily uptrend, as we can confirm by two things. The market cipher A represents the prices still hanging above the 50 EMA and the small time frame move averages, so it shows overall strength in the trend. The trend is still upwards, and of course the Gaussian channel. The price is sitting above the Gaussian channel, representing an overall uptrend. Along with that, we have structural trend lines to suggest the trend is an uptrend. We have higher lows, we have an overall uptrend in price. We'll come back to this chart in a second, because it is showing a degree of weakness, but for now it is still an uptrend. So we have a daily uptrend. For the weekly chart, we have a weekly uptrend as well. Again, looking at the price, we are pushing upwards. We have broken through the 50 EMA, we have broken the 200 EMA, and we have broken through the Gaussian channel, even breaking the midline. So we have a weekly uptrend. This weekly uptrend is not a strong uptrend. The daily is a strong, the weekly is a neutral. Okay, it's slightly strong. It's just kind of pushing into the strong territory. It has to break over 30,000 to become strong. The monthly is not yet in a uptrend. We are not yet in a macro uptrend. The macro uptrend requires a monthly close. So breaking over this level here will result in a trigger of a monthly uptrend. That is why it's so significant. According to historical data, that is what we're looking for. As we can see, every single time that happens, we actually never close a monthly candle back below that level. Even in the COVID 2020 crash, we remained above it. So going off that data, we can see that 30,000 is going to be a massive trigger for a macro uptrend. Okay, keep that in mind. Number two, guys, if we look at the 4-year cycle, we can see that every time we close above 30,000, we actually eventually climb up to retest or break through the first high of the dead cat bounce in the bear market. Looking at the dotted red line now. Look at the monthly candle close, look at the dotted red line. We close a monthly, we come up to the dotted red line. We close a monthly, we come up to the dotted red line. We close a monthly, we could potentially come up to the dotted red line. The dotted red line in this instance is 48,000. Okay, guys, very important stuff. Now, if we close a monthly candle under 30,000, this is not going to be by itself enough to suggest that we failed to break over 30,000. We failed to create a macro uptrend, because we are still in a daily, we are still in a weekly uptrend. So just closing under 30,000 isn't enough to say, oh, new lows are incoming, the market's ruined, yada, yada, yada. That is not enough. But what it does suggest is on this monthly candle attempt, we have failed to break through. It may mean during next month we break through, it may mean we reject. But what it does tell us is it tells us the probability of a rejection from this level at 30,000 has now increased even more, okay? There is still high probability we reject at 30,000. As we said already, we have been saying that, but the probability will furthermore increase even more if we do get that close. If we go back to a 4-year cycle, we can see we have actually had instances before where we have failed to close above. Look at this instance here. We retested for 2 months, we failed, we rejected, and then on that 3rd month we broke above. So we have seen consolidation and compression right underneath that yearly low before. This was back in 2016. That is definitely a possibility. The probability for new lows is very, very small. Now, I would say the possibility for new lows is very much impossible. The only way we see new lows is if the Federal Reserve shift the narrative, meaning interest rates start to go back up, CPI starts to get worse. All these leading indicators, PPI, CPI, employment data, all this stuff starts to get more bearish and interest rates start to rise. That will shift the systematic risk, that will flip the systematic risk, and that could drive the prices to new lows. Unless that happens, the price is not going to go to new lows. Here is the thing. Everything is cause and effect in the market. The prices don't randomly do things unless they're heavily manipulated, and small caps can be manipulated, but big assets like Bitcoin is very hard for it to be manipulated on that kind of scale. So unless that systematic risk completely gets flipped on its head, interest rates start going up, the entire economic situation completely flips, okay, we could see that happen with CPI and FOMC this month. It's very unlikely, but it could happen. We're not going to see new lows, okay? Things don't spontaneously occur. Everything's cause and effect. So the uptrend is still intact. The bottom is still in. It is very unlikely we go to new lows unless that occurs. But it is still likely we'll see rejections from 30,000 that could take us to 25.2, 24.4, maybe even lower. And we'll talk about what that means. So let's take a look. If we reject from 30,000, we could potentially see a continuation downwards to 25.2 to 24.4. And we're going to discuss what that means in a second when we go to the smaller time frame, discuss what would trigger that move, and more importantly, how we could get there, what it would mean for the price. But for now, we're going to just take a look at the structures. So currently what we are seeing is, of course, a price action retest at $30,000 range as represented by this red zone. Not only are we retesting this range, we have weakness in the charts. We have an overall uptrend, which is phenomenal to see, but we have weakness. This was a glimmer of weakness. This was a glimmer of weakness, okay? A little small drop into the Gaussian channel is a glimmer of weakness. At the moment, we have bearish divergence to develop. We have a daily bearish divergence. It's been quite a long bearish divergence to develop. This is weakness. This is a discrepancy between momentum and trend, okay? A momentum and a trend. If we see momentum falling, it represents decreasing volume, decreasing volatility, decreasing liquidity, decreasing velocity, and decreasing speed. Guess what price action strength is determined by? All of these factors, okay? So if you want to define the strength of a trend, we look at volatility, volume, liquidity, velocity, and speed. We look at those things. So if momentum is telling us that these things are falling, what does that tell us about the price strength? It tells us the strength of this trend is weakening. It is simple mathematics, guys. It is simple algebra. You fill in the gaps. This isn't rocket science. This is definitely not pulling random numbers out of the sky and making narratives up. We are simply telling you what the charts and price action are saying. The price action is a direct reflection of all of these components, as these components make up what the price action actually does. So if we look at the volatility, it is falling. If we look at the volume, it is falling. Liquidity, it is falling. And that is all expected because we are in a high time frame resistance, okay? It is expected. And therefore, if it's expected, we can't be overly bearish about it, but we have to be aware that the possibility for a rejection is there. So what would invalidate this? A break over this downtrending line on the daily would. We need to have a positive shift in momentum. We need momentum to go from representing decreasing volume, volatility, liquidity, velocity, and speed to representing increasing volume, volatility, velocity, and speed, because that will then represent increasing price strength. To do that, we need to flip this line. We need momentum to shift positive. If momentum shifts positive, then it will reflect the price action has strength, and the probabilities of a continuation upwards increase, guys. So if we do not see that push upwards and we break down, the next logical target for Bitcoin is going to be 25.2 to 24.4. Here's the thing, if we drop below 24.4, that is when this daily uptrend is over. The daily uptrend is over if we lose 24.4. Watch it like a hawk, guys. If that level gets lost, that is when the bears are actually gaining strength again. The bears can gain strength on a small time frame. Sure, the price swings up and down. I'm a scalp trader. I love trading a small time frame. But if we look at the daily chart, the bears have no strength here until 24.4K is lost. Let's get into a small time frame, guys. Heaps of stuff to talk about. Here is a smaller time frame. Let's first piggyback off what we said before. What is the probability of a rejection to 25K? What could trigger a move upwards? Two questions we're going to answer. We'll go from the bearish side first, just because we finished talking about that. So, as we said, we could see a rejection to 25.2 to 24.4. What would trigger it? How will we see it? When will it happen? And do we have any support? So, smaller time frame. We have a huge range we're trading in right now. Let's imagine the price has just come all the way down here, okay? Let's just imagine, we'll talk about it in a second. This is the level of support we need to hold above to prevent a collapse towards 25.2. If we lose 26.8 to 27,000 base of support, we are going to see a move into this lower resistance range according to the VRPV. If it's got a lower resistance, it has a requirement of lower volatility to result in increased speed and velocity, okay? If we see a range with low resistance, Therefore, low historical orders, low current orders, it doesn't need as much volume to push through. If it doesn't need as much volume to push through, speed and velocity increase. And therefore, we can actually call this level a trigger point, because a trigger point is a price point on the chart that represents a shift in speed and velocity in a certain direction. Where does that shift take us? It takes us to the first peak, which is around 26,000 to 25,700. And then the major chunk of support between 25.2 and 24.4. So if we lose 28 to 27 to 26.8, that is the trigger for a higher time frame correction on the daily chart that will take us down towards this level. Okay, keep that in mind. For the upside, guys, we have obviously some weakness in the chart over here. We can see weekend price action is really living up to its bloody standard of essentially doing nothing. Let's take a look at this, guys. So first and foremost, higher time frames. We have a resistance trend line right over here. This is our diagonal resistance. We can see a horizontal resistance. Therefore, we can say for certainty, for a continuation upwards, we need to clear both this diagonal level and this horizontal level for a higher time frame continuation. Meaning, if the diagonal level breaks, this horizontal level is still going to act as a resistance that could potentially push the price down. A break over 30,000, however, is going to be a horizontal break that will push the price upwards. Now, this is a local high. So the continuation upward even higher will only trigger about 30,900, guys. Watch that level. Okay. Smaller time frame. If we fail to break this diagonal trend line, we are likely to see a continuation downwards. On the 4-hour chart, guys, we can see we are starting to push under these smaller time frame moving averages. We have a overall downtrend developing on the small time frame and a higher time frame. This is a downtrend. We have two downtrends, a small time frame one and obviously a 4-hourly one spanning over the last 10, 15 or so days. So we have a higher time frame downtrend and a small time frame downtrend. For these to push upwards, or for the price to push upwards, both of these downtrends need to be invalidated and invalidated very fast. It is unlikely to see both of these downtrends invalidated within the next 21 hours, and therefore the probability of a break and close above 30,000 this month is going to be quite low. But like I said, it doesn't matter if we don't close this month, because what matters is that we close above it at some point. So let's get into a small time frame and discuss the 2-hour chart. We'll bring up the RSI, we'll discuss the price action over here. What I noticed on the 2-hour RSI is, of course, a little bit of weakness showing. And this weakness isn't really confirming anything as of now, but it is showing weakness. We had, obviously, this cluster of price action over here. I'm going to go ahead and circle it. This cluster of price action right over here, okay? We have seen a momentum shift downwards. We have seen a momentum shift downwards. We are pinching between the smaller time frame and the 50 EMA. I don't think we're making any major move over here. I think we're very much consolidating, compressing for the new week. But watch the 50 EMA in 2 hours, guys. We lose that 50 EMA in 2 hours, we're going to push down towards the support level. Until then, we do have the possibility of pushing upwards. Again, this is kind of no man's land. I like to name it no man's land. It's like no man's territory. It's consolidation, it's compression, it's decision making. It's kind of work itself out. It's trying to decide what it wants to do. And again, I don't think this is a zone you want to be over trading in. More or less, if you are trading incredibly small time frame. Let's go down to that smaller time frame and discuss. So, smaller time frame over here. I haven't even looked at it personally. Let's discuss what's happening. We can see we have a smaller time frame downtrend. Within this downtrend, we have this diagonal trend line here. So I do expect, again, the price to tinker down until this resistance breaks. This diagonal resistance needs to break. If the diagonal resistance breaks, we can expect a rally toward the uptrending of this higher downtrend resistance, this higher downtrending resistance, okay? This higher downtrending resistance being that higher time frame resistance we need to break above to allow us to push back to 30,000, okay? Watch that. Until this resistance breaks, guys, we are in a downtrend on a smaller time frame. The price is definitely moving downwards, so keep that in the back of your head. Let's go ahead and finish up and do a TA on a smaller time frame and then wrap up the video, guys, and we'll leave it. So as we can see, Gaussian channel, 4 hour, above the Gaussian channel, good. Trend is still intact. We don't have overall weakness. RSI is moving downwards. Market cipher B is, of course, going to be moving downwards as well as momentum is falling. In fact, we have positive momentum still on the market cipher B. It is, however, decreasing quite rapidly, heading towards that negative territory. This is weakening positive momentum. RSI, not looking very good. We actually have negative momentum in the RSI. We have broken that trend line. We have, of course, falling positive / negative momentum. So we have a little bit of discrepancies between price action here. We are having some bullish indicators, some bearish indicators. We are very much in this neutral territory, this decision-making phase, so don't jump in too quickly for this one. Going to that 8-hour chart, let's take a look over here. Again, above these small time frame moving averages, above our trend lines, above the Gaussian channel. We are actually in the Gaussian channel over here. In fact, let's go to the 12-hour chart. 12-hour chart over here, guys. We are within the Gaussian channel again. Midline of resistance at 28.7. Going to be a very important level to look at. Gaussian channel holding as a bit of resistance here, but overall weakness since we have broken into it. And when we break into it, we're likely to push through it. So watch that, guys. Again, I'm not going to go into it too much today on the smaller time frame because a lot of it's going to be determined by the economic news that comes out. The weekend price action is notoriously slow, so instead watch those high time frame levels, watch those smaller time frame levels, watch the trigger points, keep an eye on the small time frame price action. And guys, if you enjoyed the video, smash the like button, hit the comment button, and subscribe. It is the first video back in 2 days. It's always a little bit challenging to get these videos out. There is so much to talk about, so much on my mind. I do end up just rambling, and I will literally talk for hours if I don't put a stop to myself. So I'm going to go ahead and end up the video there. If you're interested in this kind of content, if you like this kind of stuff, consider learning. Really easy stuff, guys, to learn. We teach you guys from the basics upwards. 10 units. If you're new to TA, perfect for you. Contact us, cryptoacademycourses@gmail.com. Right over here, we'll send you all the information. Thanks for watching, guys. See you guys tomorrow.